The Australian share market is coming under pressure this morning with a fall of 0.6%. We did see some weaker trade numbers coming out of China over the weekend, but this morning we have seen GDP numbers as well as a raft of June numbers, and the second quarter GDP numbers coming in as expected, up 6.2% year on year. We also saw industrial production for June being stronger than expected, coming in at growth of 6.3% compared to an expectation of 5.2%. And retail sales showing growth of 9.8% compared to an expectation of 8.5%. Looking across the market, we're seeing all sectors trading lower today, with the exception of consumer discretionary as well as materials. But the worst is the telecom sector, with Telstra down 2.1% as most of the bond proxies are being sold off. In the material sector, we're seeing the iron ore miners doing well, the copper miners doing well as gold looking good. But AMP shares down 14% to a new record low. It looks unlikely that the sale of their insurance business will go ahead. So they have cancelled their interim dividend, and it does look like there might be a possibility of a capital raising on the cards. So the shares under pressure. We're also seeing Integrated Research down by 11% after providing full-year guidance to the market. This is a performance management software firm, and they're guiding for revenue between $100 to $101.5 million and profit after tax between $21.2 to $22 million. While the results are and the expectation, the guidance is fairly good, given that the shares had gone up 45% over the last 3 months. There was a lot more anticipation built in, and unfortunately the shares are selling off. So all in all, a weak start for the week. We will be watching US earnings season for the rest of the week, as well as job numbers out of Australia on Thursday.